Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday. This time it's September 23rd. And today we'll talk about all your favorites like Bitcoin, Solana, MicroStrategy, Tesla. But first, remember, none of this is tax, legal, financial, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. Let's dig into the charts, guys. All right, as always, we're going to start off with the Bitcoin TABI model. Here on the Bitcoin TABI model, you'll see we are still light orange. Can't seem to break up into that dark orange, then light red, then dark red zone. We are sitting here basically right on the short-term holder cost basis, which now is right around $111,434. Call it $111,500, roughly. And thank you to James Check from Check on Chain. He puts these numbers out every day with the short-term holder cost basis as well as the true market mean, which is now almost up to 79,000, just shy of 79,000. That should act as a floor moving forward. Doesn't mean we won't trade below it, but that's pretty much going to be the floor. So anybody waiting for $20,000, $30,000, $40,000 Bitcoin, that's likely not going to happen ever again. If it does, we probably have much bigger problems to deal with. But again, moving up to the short-term holder cost basis, that typically acts as a, call it a short-term floor in the in a bull market, right? If we get down to that level, oftentimes we'll see a bounce back up. We saw it back here at the beginning of September, end of August. The short-term holder cost basis was lower then. It was down around 107, 108, maybe 109. I think it was like 109. Now it's up to 111. So that means over the last 155 days, those people who have bought Bitcoin on average have spent $111,434 at $111,434. You'll note that we are still significantly above the 200-day moving average, but we are slightly below both the 50 and the 100. We are right below the 100-day moving average. You can see on the Meyer multiple, it remains low, right down near 1. And again, you'll see on the MVRVZ score, that's heading back down, getting really, really close to 2 again. What does all that mean in English? It just means that things are kind of quiet with Bitcoin right now. It's not really in this blow off top like we've talked about. And I keep showing this historical volatility chart. I did add some color coding to it so that you can see where we are now. We're below 20, guys. We're over here in the 16, 17 range on the historical volatility. This thing usually likes to run hot, like way up here in the 100, 75, at least 50 to 75 to 100 range. But you'll notice that the volatility has been virtually squeezed out of this thing for the last several months now, going all the way back to April. April was the last time that we really had a volatility measure that was worth a hoot. If we come over here to the daily chart, you'll see we are still in a structural uptrend on the daily chart. What you will notice is we're ping-ponging back and forth between the support zone that I identified on here and the resistance zone. We are down near the bottom of the linear regression channel. We're right in the middle of all the confluence clouds. So we're kind of at the mean right now. This is it. This is the midline for Bitcoin. Maybe it's happy place that it likes to go to right now. You'll notice RSI is slightly below 50, the midline, and MACD is slightly above the midline. If we come over here and we look at the global liquidity, we had made a top back here in July. That acted as resistance. We started to resist again here at the end of August, and then turn on the money printer, and bang, we made a new all-time high over here. And it's this chart's just looking like it wants to continue doing this, just whoop straight up and to the right, right? So count on that. That's one thing you can count on, is that the liquidity will keep coming and that the governments will continue printing. If they do, it's not that Bitcoin is going up in price. It's that it takes more of those devalued dollars to buy a Bitcoin. Bitcoin doesn't go up in price. One Bitcoin always equals one Bitcoin. But keep that in mind. This is your hedge against that inflation. At least that's my opinion of it. and I'm sticking to it. You see right now we are testing that 100-day moving average, trying to get back up above it. We will then meet some resistance here at the 50-day moving average. Probably will be kind of mild. Our big resistance remains this red line that you see across the screen right here, this deep red line. It's at about 117, 118. And that's that $118,000 level. Every time we get up near it, we tend to reject. Yeah, we'll break through it, but then we get right back below it again. We need to get above 118, retest it as support, and then off to the races. Go set a new all-time high. On the 4-hour chart with Bitcoin, need to update this just a little bit. So let me make it a little bit longer on the linear regression channel. There we go. We are outside of that linear regression channel. I felt like that starting on September 1st, we started to make a series of higher highs and higher lows on this 4-hour chart, 4-hour extended trading hour chart. Note that we did print a giant green dot. To me, giant is anything over 1 standard deviation. 2 standard deviations, it's like, it doesn't happen very often. Note that the RSI was pretty low. Let's put a number on that. RSI dropped below 22.83. Guys, anything below 30 is typically a buying signal, okay? A buying signal. Again, not financial advice, just chart advice. Anything below 30 on RSI, that's a buying signal. Looks like MACD, we're about to have a crossover. You see the light blue line about to cross over through the light red line. That is a positive crossover. That's typically a buying signal. We have the green mean reversion dot. We have been down in the lower 1/3 of all the confluences, and we're tickling this support zone that I've had on the chart since well, all the way back here in May of this year. So it's been there for a while, guys. It's not like I just put these green zones on here and go for it. Once I saw that this was an area that we weren't getting through, that became a resistance zone. Once we got above it and we come down and retest it, it is now a support zone. This resistance zone will eventually become a support zone. I use VRVP, I use moving averages, fib levels, all different kinds of things to set those zones. So I know I don't want to be buying when I'm up in a resistance zone. I want to be buying when I'm down in the support zone. Solana Bitcoin pair has been off to the races since June. This is a daily chart on Solana Bitcoin. We've had some opportunities to swap Solana back into Bitcoin, Bitcoin back into Solana, Solana back into Bitcoin. And then as we bottom out at the bottom of this channel, back from Bitcoin back into Solana. So if you want to trade this, you can go back and forth. But realistically, it's pretty much just been Solana to Bitcoin over these last couple of months. Notice that we're coming up against this big block right here. And I know it's really wide. It goes from 0.002 to 0.0027. That's a large zone, but that is where we couldn't seem to break through. We wicked above it a couple times, but we couldn't seem to break through this zone back last year, right? This at the beginning of last year, all the way through this time last year, this has been that resistance zone. So expect to see that we will have some opportunities up in this area again as Solana, I believe, outperforms Bitcoin over the next several months. What you'll note is we do have an actual sell signal here. So if you had not taken profits, you might want to sell some Solana into Bitcoin. I'm not saying your entire bag. I'm not saying that's it, it's over for Solana. I just got done saying I think it's going to outperform Bitcoin. But if you want to lock in some profits, and Bitcoin, like it is for me, is your store of value, your savings account, roll a little bit of those profits from some of those altcoins. There's also going to be an altcoin rally coming up. It's kind of already started. So start rolling some of those profits from altcoins over into Bitcoin, right? Then when Bitcoin rallies, it's like you're double dipping. You're getting an extra little push when Bitcoin rallies against the altcoins, not necessarily in the next week, 2 month or so, but in the next 6 to 12 months. It'll likely perform better. Then the altcoins will perform better in the short run. So altcoins like Solana, I know we call it an altcoin still, it's one of the majors, but you'll see here Solana has given us on the daily a few clear, perfect opportunities to sell, come back down in, reload when we touch the bottom of the linear regression channel, sell near the top of linear regression channel, reload, sell, reload, right? Again, look at the mean reversion. Big red mean reversion dots are your clue. When you see a mean reversion dot up there in that 1 to 2, maybe 2.5, 3 standard deviations, that's your cue. That's your cue to perhaps take some profits and reload. Maybe you're in a perp trade. That's a great time to get out of it if you're perping long and get some cash back in your pocket. If you look up here right now, we are above the resistance zone. I'm going to show you on the 4-hour chart. It's a little bit more clear. But this, we're now going to turn this into support. Since we broke above it, likely come back down, turn this into support right here around this 210 to 220 range. I need to update this, guys. Right now, you can tell just from looking at this, this is where the resistance is right here around this 238. But if I take a longer view, I back out just a little bit, you'll see... There we go. That volume right there, that's going to be the new resistance. So let's go ahead and do that real quick. I'll show you how I'm doing these things, how I'm setting these zones. So I'm going to go into the rectangle over here. I'm going to take a look at where does that zone start. It goes up to about here. We're going to extend it over like this. And I'm going to go in. I already have some presets, so I'm going to go in here to a template and call that resistance zone. And we will click OK here. This one I'm now going to turn into support because I believe that is now our new level of support. So see how a resistance becomes support and vice versa. So that's that. And then this one, I might leave it on the chart for right now just in case and call that the previous support zone. There we go. So this was our previous support zone. That was resistance here. That resistance became our current support zone. And I added in a new resistance zone up here. And it's, again, using this VRVP, also using this fib level. It's not surprising. You can look back and see, where did we turn around most often? We came up, turned back down, came up, turned back down. Right around the same place that we're doing it right now. So that will act as short-term resistance. Come over here to the Solana 4-hour chart. And like I said, I already had it built in over there. You can see it right here. I just had forgotten to do it on the daily chart, but at least you get to see how I do it. And notice that we came back up, came to the bottom of that zone, came back up, broke down. Where did we break down to? Perfectly to the previous support zone, right? And again, I've had this on the chart since back here in July. Once I saw that that was resistance, broke through it, new resistance, it now becomes support. We have a green mean reversion dot on the 4-hour chart. We have a RSI reading that was below 30. Looks like it was around 25. It was 21. So that is significantly oversold. Let me zoom in right here and you'll see this area, great area to go long. Again, not financial advice, just what I'm doing. I kind of created a Meyer multiple for this, just how far it is away from the 200-day moving average. This is the little thing that I created myself for my own chart. But notice we're about to have a crossover on MACD right here. RSI is starting to pop back up after being down at 21.26. Green mean reversion dot in the 1 to 2 standard deviations below the norm mode or below the mean in this support zone. Everything is screaming right here. Perfect place to go long. Has the trend flipped yet? Nope. But is it looking like it's about to? Yes. If you want to nail the bottom, and I would be remiss if I didn't tell you I am in a perp that I started into it around 220, and I have added all the way down to 215, right? So 220, 215. So I think that makes my entry somewhere around 217, 218 right now. And I'm anticipating that we'll take another shot at this resistance zone. If we look like we're going to blast right through it, I'll stay in the perp until we get on the other side of it and get into that free air. If we don't, if it looks like it's just going to come back up to here and turn around, maybe up at this fib level right here around 230, 235, I'll exit it. Don't be greedy on these things, especially if you're in a perp. So anyway, perping ain't easy. And a huge thank you goes out to Joe Biden's Daycare. Yes, that's what he goes by on YouTube. He said, especially because you have a gift where your presentation is genuine. It's like having a conversation with a buddy when I watch your videos. Your videos are focused and broken down so simply. Crypto and trading can be intimidating. and simple-minded Biden brains like mine get frustrated easily. This is not a political channel, but that is actually kind of comical. So thank you, Joe Biden's daycare, and thank you, Fulify? I don't know how you say that. Fulify said, great as always, cannot recommend my courses enough. So thank you both very much for saying that. Really appreciate it. MicroStrategy on the daily chart, you'll see we are in a structural downtrend. I established that from July 16th. We were making a series of lower highs and lower lows. You'll note that if you look at the confluence cloud, there's the top of the bullish, there's the bottom of the bearish. We've been down in the lower 1/3. To me, that's a buying signal. We've also been mean reverted on the daily, almost as low as 1 standard deviation below the norm. The MNAV hasn't been above 1.5, guys, for over a month now. I mean, wicked above it a little bit here and there if you look at the fully diluted one. But if you look at the undiluted one, we've just been down. All the Bitcoin treasury companies have their MNAVs compressed right now, I feel like. Most, not the shiniest new pennies. 200-day moving average is acting as resistance right now, which is not surprising when you're trying to come up at it from below. Sentiment has been pretty crummy on MicroStrategy lately. So when you look at all of these things, it is kind of the most hated asset right now, right? It's that one that people are like, why isn't it going? Why isn't it doing what it's supposed to be doing? And I think a lot of it has to do with Michael Saylor changing his tune on when he's going to ATM. And he has been ATMing, but you notice it's been very, very little. I mean, they've bought a couple hundred Bitcoin here, 500 there, 300 there. It's so weird to say that's very little, but for them it is. They were buying in the thousands before. Now they're buying in the low hundreds. So it tells me that they're just trying to load the boat with as much Bitcoin as possible so that inevitably when Bitcoin runs, MicroStrategy will run. Where are the support and resistance zones? Well, the support zone goes from 325 up here to about 350. 325 to 350 right now, that for me personally, that's a buy zone. The closer to 325, the better. When it got up to 350, I had already ceased buying by then, and that's obvious. You see a red mean reversion dot there, and RSI was almost out the top over 80. That's not when you want to buy. That's when you're maybe considering selling, especially when you're coming back up against a 200-day moving average. I sold some covered calls there. People are like, you're crazy. What if it blasts straight through there? I don't really care. I'll roll it if I have to. I'll roll them indefinitely if I have to. For me, it's about how can I generate some extra return off of these assets that are just sitting there anyways, right? So currently, support is down to 325 with MicroStrategy. I do see it potentially going down to 300, but that would be rare. I see 325 as the floor. We've got to get through this 200-day moving average just above 350. We've got to get back above the 50-day moving average at 371, and then we've got to get above the 100-day that's up here at 380. And 380, you'll notice, is this red line. It's where VRVP's point of control is. That's where the most number of shares of MicroStrategy have changed hands, is at 380. So 380 will act as significant resistance on the way back up. 380 is MicroStrategy's answer to Tesla's 360. Remember how many times we struggled to get through 360? Now we blasted through it. But for a while there, we were struggling to get through it. I think it'll be the same thing with MicroStrategy. This resistance zone is going to be a bitch to get through, excuse my language. Once we get back up above that, it's clear sailing. Tesla on the daily chart, notice even on the daily is now mean reverted over 1 standard deviation to the upside. You'll see all these little yellow boxes on here. Every single one of those is a gap up that has not been filled. A gap up that has not been filled. Gap up occurs when you close the trading session, not extended trading hours. You close the trading session at 4 p.m. Eastern time in the United States here, and then open the next day at a higher price at 9:30 a.m. when the market opens the next morning, or if it's over a weekend on Monday morning. Okay, I hope that makes sense. So every one of these yellow boxes is a gap up. If I really zoom in on those, you can see, guys, here we closed, gapped up, partially filled the gap, gap didn't fill, closed, gapped up, never even came back close to it. That was the day that Elon was doing all the buying, and then the buying that the plebs did right afterwards. Closed, gapped up, filled part of the gap, but there's still an area that never even filled in. Where is this one? Closed, gapped up. Why is that way over there? Oh, there was one in between. Closed, gapped up. That one did fill. And then we had this last one. Sorry, this should be from that candle. We closed, gapped up, even most recently. Do gaps always fill? No. But what typically happens is you at least trade some shares down through these gaps in order to close it before going back up again. Is that going to happen? Are we going to go all the way back down to 340 with Tesla? Honestly, I don't see that happening. But I could see us going back down and tickling 360 again. Why? Because that was resistance for the longest time. Let me zoom out and I'll show you what I mean. If I zoom out right here, let me rescale that because that looks funny. It's this white line that you see across my screen right here. Resistance. We tried to support on it, broke down, used it as resistance right here in February, resistance here in May, close to resistance here in June, made our way back up and blasted straight through that 360, straight through it. Look how very few shares exchanged hands down here and down here, like at around 400 and over here at around 370. Very, very few shares because we blasted straight through those areas and gapped up very, very quickly. Historically, when we've gapped up, if you look at this last run, we gapped up, filled it over there. We gapped up from here to here, filled it over there, gapped up from here to here, filled it right there. Like all these gaps filled on the way up. Will it happen again? I don't know, but I've got to play with the odds. And I believe that the odds are we come back down, we retest, we at least fill that one, and that one. This guy over here, there's plenty of volume that's exchanged hands there. I don't think we'll make it all the way back down to there, even though there's still a slight gap there. All right, so that's what I see on the daily chart right now. Let me close that. And again, we are mean reverted significantly to the upside. Well, on the 4-hour chart, you can really see it. Huge, huge mean reversion. That was the largest one since June of 2018. RSI was at one of the highest levels in months and years also. MACD way, way, way up to the upside. You see where it crossed over right here. That corresponds with the sell signal here, which we were out of the confluence, like all of the confluence clouds. We're back in, but barely in. We're still in the upper 1/3. How long can we stay up there? We could stay up there for a while, but we are beating our heads up against a little bit of resistance here. You notice the move is starting to slow down. Something else I want to show you is we have what's called a bearish divergence. So if you look, RSI is going down, mean reversion going down. From that point, price is still trickling up. That's called a bearish divergence. Oftentimes that ends in a sell-off. Not always, but oftentimes. So again, just playing all of the different scenarios that could happen. I don't want you guys to think I'm trying to scare you out of like selling all of your Tesla. I'm definitely not. But for those of you that have big bags of Tesla and you've held them for years and years, and you want with a portion of that Tesla to write some covered calls, get some practice doing it, now may be the time. Okay, I've done it, and I haven't gotten called out of a single share of either MicroStrategy or Tesla yet. And rarely, if ever, do I have to rescue the position by buying it back at a higher price than what I sold it for without being able to sell a new one. I'm constantly rolling these things. It's generating a perpetual monthly income. I'm going to hold these shares, my Tesla and my not all of the MicroStrategy, but some of the MicroStrategy. I have a lot. And Tesla, I'm holding those things for years. Like it's a years long play. So just realize we're near the top of the resistance zone. Everything is overheated. Do I expect it to come back to earth a little bit? Perhaps. We'll see. But I'm believing that we do fill these gaps on Tesla. Nvidia was perfect until it wasn't, and it sold off hard, right? Going all the way back down to $164. Great buying opportunity right there in a bull market. The best buying opportunity was down here, but I know a lot of people said they missed it and they were waiting for this trend to flip. Well, guys, it flipped, pulled back some, and then pulled back a lot, and now skyrocketed back up and set a new all-time high just yesterday, right? So now it's running hot again. We're starting to make our way off of the bottom of this linear regression channel back up towards the center. What does it look like on a 4-hour chart? On a 4-hour chart, look at how vertical this linear regression channel is. Guys, it's almost straight up. But we are finding significant resistance here at around 182 to 180 to 182, 183. That's the current resistance zone. We break above that, we've got some clear sailing ahead, right? Because then that's price discovery. We're making new all-time highs. But notice how quickly the mean reversion changed from being over 2 standard deviations to the downside to being over 1 standard deviation to the upside. It happens fast, right? And you can see it. You can see how narrow the confluence cloud had become right here. Super narrow. And then bam, it blew down to the downside, widened the volatility of this confluence cloud. Now the confluence cloud is starting to squeeze back together again just a little bit, except for this last day or so. What does all that mean? Well, we're back up in the upper 1/3 of the cloud. If you look, here's the top of the cloud right here. There's the upper 1/3. We're back up in the quote sell zone. The buy zone was down here in the lower 1/3. You can see we even wicked out the bottom of the bearish cloud. That to me, the way I use this thing, that's a buy signal right there, guys. Tesla, MicroStrategy Tesla pair, all of our favorites. Yeah, I've been wrong. Every time it looks like this sucker's going to flip, it turns around and flips back down and starts making new local lows. Not all-time lows, but local lows. We're back down to where we were pretty much back in January of this year, right? So from January of this year, we were at a 0.7 ratio, went as high as 1.49, and now have plummeted all the way back down to 0.76, 0.77. Everything for the last 2 months has been saying, go from Tesla back into MicroStrategy, go from Tesla back into MicroStrategy, huge green mean reversion dots. But notice we haven't been able to get back above the mean at all. Every time we get close, it immediately flips straight back down again. So what's the advice there? Me personally, I try to keep both, right? I've got a decent amount of both. Tesla's the one that's been lifting my portfolio up a lot lately, which is great. But I still have the MicroStrategy, and I'm still waiting. And I know it may or may not happen, right? It may not come back up to these levels up here. Do I believe it will? Yes. Am I prepared for it to? Yes. I still have some MicroStrategy that I'm going to pair trade back into Tesla because I took some of my Tesla and pair traded it into MicroStrategy here at the 1-to-1 ratio and down here at the 0.75-ish ratio. But again, I don't know when this turns around. All it would take is a huge announcement this week, supposedly that's going to happen in the crypto world. Bitcoin goes on a tear. MicroStrategy goes on a tear. Tesla has already gone on a massive tear. So will it realistically keep going up? Perhaps. But again, that's what we do, is we play probabilities here when we're using these things. So me personally, I do believe, and I still with all my heart believe, that this thing is at least going to make its way back up to here, to this 50% level, to where the 200-day moving average is on this pair, maybe even back up to this 1.2 range. Be a great place to go ahead and flip back into Tesla. You'll get a lot of Tesla if you do so. MicroStrategy IBIT, this is another one. Again, I'm pretty transparent about where I did a flip. I put some IBIT into MicroStrategy. It went against me, but now is starting to make its way back up again. So, this is saying when you get a buy signal on a MicroStrategy IBIT pair chart and you get the green mean reversion dots, that's telling you to go from IBIT into MicroStrategy. If this red dot was up in the zone that I'm looking at, again, looking at a mean reversion of 1.0 or higher, like it was back in here, that's a clear signal to go from MicroStrategy back into IBIT. You can also look over here on the, and if I zoom out on this a little bit, you can also look over here. We did go out of the top of the cloud here. When you go out of the top of the cloud, that's a MicroStrategy to IBIT. When you're below the cloud, that's an IBIT to MicroStrategy. I have this thing set, I think, pretty tight over here. Tightness is on neutral. I might even go to loose just a little bit. That way the cloud's a little bit bigger. It takes a little bit more of a move to go outside of it. That's kind of how I like to keep it. Again, it's personal preference, guys, whatever you think is best for you. But using the two of them together, definitely mean reverted to the upside. We are out the top of the Confluence cloud, out the top of the ARB cloud over here. That perhaps was a move from MicroStrategy back into IBIT, but we weren't in the upper 1/3 of the Confluence, nor did we have any a mean reversion greater than 1. Those are the things that I'm looking for to go then from MicroStrategy back into IBIT. A lot of people ask, where am I doing this? I'm doing it in a tax-free account. So I'm doing it in an IRA because then I don't have to worry about the tax implications of it. Rotation model is the other one I talk about. Rotation model right now is pretty much just still being Nvidia. That was the last signal that I got on mine, was to go into Nvidia, and nothing has happened since then. So for the longest time, it had us in MicroStrategy, 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 then bang over here into Nvidia. So I have Nvidia. I did take action on this last one and move out of MicroStrategy and into Nvidia per the rotation model. For me, it's a portion of my portfolio. I set aside a specific dollar amount of money to put into the rotation model to test it, to see how does it work. I also personally really enjoy trading. The rotation model is one of just maybe a dozen or so different trading techniques that I employ, whether it's just buying and selling shares, buying and selling crypto, pair trading shares, buying leaps, buying synthetic longs, selling leaps and synthetic longs, selling covered calls, selling puts by themselves and buying them back to generate cash, perp trading over in the crypto world, using the rotation model and just kind of following it based on the signals it gives. Notice I just listed off probably 10 or 12 different ways that you can trade, that you can make money. You have to find the ones that you enjoy. I personally enjoy kind of doing it on my own, and I've had great results doing so, and taught a lot of other people to do the same. Last but not least, the MicroStrategy preferreds. STRK, as expected, is sitting there at 94.20. Guys, that thing was up over 120 for a while. The reason it pulled back so much, that has that convertibility. It's the lowest dividend at only 8% per year. It's weird to say only, but 8% per year with a convertibility of 1 STRK share to 0.1 MicroStrategy shares, or 10 STRKs for 1 MicroStrategy share. Well, that makes sense if MicroStrategy's above $1,000. But when people kind of gave up hope that that was going to happen, STRK sold off really, really hard. For me, as soon as STRC came out, I sold STRK and moved some of my cash that I'm holding into STRC. STRF is the one that pays a dividend. It pays a 10% dividend paid out quarterly. It's the longest duration and the highest on the capital stack. Remember, it's at 111 right now. So it's been selling at a premium for a long time. Like the last time it sold for par value was back here in June. It's been selling at about a 10% premium ever since, 10 or 11%. It pays a 10% annual dividend, so really that makes the effective yield closer to 9% on that one. STRD is the junk bond one. Guys, that one, you got to know what you're doing. You know, buy it low, sell it high. You're in and out of that one. That's not something you're hanging on to for forever, right? You'll notice that as soon as the dividend was announced, bang, it sold off immediately afterwards. People try to get out as fast as possible after the dividend is announced, and then buy back in at the bottom, hold it all the way up through the dividend, and sell it immediately after the dividend is announced. And you'll see that pattern happen over and over again. That's not for me. I'd rather do that with volatile assets, not fixed income assets. And for me, STRC, that's my new money market. Sorry, I blanked for a second, or savings account. So got some cash parked in there. It's sitting here at around 97.70. Look how stable it's been over the last month or so. Very, very stable. Even when the dividend was announced this time, sold off just a little bit on the ex-div date from 97.5 down to 96.5. That's theoretically the amount of the dividend, right? So if we look here, it closed that candle at 97.45. This candle went as low as 96.63. There's about an 80-cent difference between the two. That was what the dividend was 83 cents. So I hope that makes sense to you. People hold it until they get the dividend and then sell it as soon as they have gotten the dividend out of it in order to hopefully buy it back a little bit lower and repeat the process. They're trying to squeeze a little extra return out of it. So instead of a 10% annual yield, you might be able to squeak out a 12 to 13, 14, 15% yield. For me, it's not worth all that extra effort. I just hold it through the dividend, get the dividends, reinvest them back into more STRC so that the next dividend payment's a little bit higher. Repeat that process over and over and over again. It's a small portion of my portfolio, but it's worth it to keep it there than to keep it in cash where it's only yielding maybe 3, 4, 5%. I've made a lot of videos on that in the past. All right, guys, another long one. I appreciate you sticking through it all. If you liked what you see, smash that like button. Make sure you comment below. What did you like best? What did you learn today? What would you like to see more of? I already realized what I forgot today. It was ETH. I'm sorry. That's on my computer back in my home in Florida. I'm up in Georgia today. I'll make sure to include ETH in there for next week's again. So comment below. What'd you like best? What'd you learn? Make sure you're subscribed to my channel so you don't miss anything, right? You don't want to miss it if I'm putting out videos. I will be ramping up the videos, perhaps even with some members only videos moving forward. So, and I'll keep you all posted on that. Again, you can book a course with me or an individual appointment over at gdinerocoaching.com. I'll teach you everything you need to know in my TradingView and technical analysis course so that you can understand the charts like I'm showing you, okay? So that course is available over there. So is my understanding options course. You guys heard me talk a lot about options today, where I might sell a cover call, where I might go long, things along those lines. You'll learn all of those things and more over at gdinerocoaching.com. And finally, thanks for tuning in, guys. I'm G Dinero. I'm here to help you increase your financial literacy, to help put you and your family on that path to financial freedom. We'll see you next time. Take care.